Welcome back to Upside Down Data. We need to talk about Bitcoin. So Bitcoin has been going crazy the last few days. We got up as high as $64,000, which is wild. I mean, to think the last time we were at those levels was all the way back here in November of 21. Bitcoin has not spent much of its life at all up at these levels. And especially yesterday. So I'm recording this on the 29th. So February 28th was a huge day in terms of volume. Just look at this massive amount of volume that transpired on this almost 10% candle. And so a lot probably happened in here. So that's the first thing I want to talk about is what happened in this candle and what might that mean for where we're going next. Then I want to look at some of our models, see what they are thinking, what their longer term outlook is right now. So the first thing I want to talk about in terms of what happened yesterday and what might that mean going forward. So I want to look at the amount of realized profit and loss on the network for Bitcoin. So that's what this teal line is. This is just the absolute dollar value of realized profit or realized loss. So it's basically the net profit or loss on the network on a given day. Now, of course, when we look at it this way, it's kind of hard to interpret because it's not relative to what the price of Bitcoin was at that given moment. So over here, for example, when Bitcoin's price is a lot higher, you can get to higher levels of realized profit or loss by selling fewer Bitcoin than, for example, back here. So what I'm actually going to be talking about is instead of the raw value, this formula I put together, which is simply dividing the net realized profit or loss by the price. And so what this does is it basically normalizes it to the price of Bitcoin. It's more or less the number of Bitcoin that were shifted on a given day. And that lets us actually compare historical values to current values a little bit more fairly. So I'm going to zoom in a little bit more here just so you can see what's been going on a little bit more closely. So you'll notice we did see a notable spike here yesterday. Really, we haven't seen a level like that since all the way back here in May of 23. This is probably one of those first big instances where people were taking profit from this move up over here. We saw a jump a bit higher than that here. So definitely some people taking profit at this level. That could be people who bought down here and deciding to cash out here, even some people from down here. But as Bitcoin got up close to its prior all-time high, looks like there were a number of people who decided that they were going to offload some Bitcoin, take some profits. And so a number of Bitcoin in profit ended up net transacting yesterday. So that's notable, but it's also probably not a totally doom and gloom thing. You might say, oh, a bunch of people taking profit, that's bad. Doesn't that mean that price will go down? Maybe, but you do tend to see in prior bull markets, similar spikes tend to happen. So for example, here, as we went to close to the all-time high back in November of 2020, we saw a similar spike happen here. And then price ended up slowing down a bit after that, but then we just broke off to new all-time highs. So this on its own, especially this being the first reading that we're seeing here, I don't think needs to be the death knell for this rally. If history is any indication, these things happen often in bull markets leading to the eventual top. If we just go back and look in 2017, for example, there were multiple instances where we saw notable spikes up on this metric, suggesting a lot of Bitcoin transacting in profit, but that didn't stop us from continuing to go up. Now, it is notable that they often happened around local tops. Maybe not exactly at it, but near them. And so that's one of those things where we're looking at what's going on right now with Bitcoin. It would not be surprising at all for this to act as maybe a point of consolidation where price has to slow down. And frankly, that would just be expected just from a purely technical analysis perspective, where generally speaking, when you see these points where price got up to it and got rejected, you might expect that to act as resistance in the future. And especially when it's a level as important as a prior all-time high, that often is the case. We can just look back at Bitcoin's history. This has often been the case. Over here, 2020, again, prior all-time high, took us a bit before we could break out of that level. We can also see a similar thing, 2013, going all the way here to 2017, we spent time, we actually had a pretty deep correction off of those levels. And in fact, the first time we kind of targeted those levels back here, we got rejected, came back up a little bit higher, and then got rejected, and then we ultimately really pushed above it to new all-time highs. So that would not be unexpected at all. And in fact, it would be somewhat unusual from a historical perspective for us to just slice straight through it. Could happen. Sample size of 2 is not really all that much, but I'm just saying that's not unexpected. And so when you look at that in conjunction with something like this marking a kind of maybe a temporary local top or close to a local top, some consolidation, maybe in correction, would not be surprising at all. It might just be healthy market dynamics. These people taking profits, new people stepping in, let some of the froth kind of get itself out of there, let the open interest cool off, leverage positions cool off a bit to set the stage for the next push up that might actually take us above. So I think this is all telling a similar story to what we've seen in the past. Would not be surprising at all if that's how things play out in the short term. But importantly, the short term is not really what we care about, right? If Bitcoin's going off to all-time highs, that's what we care about, is the all-time high. We don't really care about what happens right now in the short term, because that's not really going to make or break anything. And there might be some volatility, but who cares if our ultimate destination is higher than Bitcoin has ever been? So I want to talk about some models that have a bit of a longer term focus to them, medium and longer term, to see what they're looking like and see how that thesis might be on track. So one of the models I want to talk about is our market direction classifier, or MDC. So this is a model that generates this yellow line that I have here, which is the critical level. And generally speaking, when you're above that critical level, that's bullish. When you get below it, that's bearish. And you generally will have at least some correction off of it. And often when you fall above, you'll generally have at least some kind of upward movement. Now, what's nice about this model is you can get a sense of how much leeway is it giving a given trend before it might get a little bit concerned. And that can be really quantified as the difference between the price and wherever the level of the MDC is. And so what you can see right now is that it's giving a lot of leeway to this rally. The MDC is only at 45.5K right now, price obviously way above. So it's saying a lot could happen in the short term above these levels, but it's going to remain bullish as long as it's above those levels. And we can just look at prior bull markets to get a similar idea that, for example, back here in 2020, as we're going up to the last all-time high, there was a big amount of leeway it was getting priced this whole time. And so even though we had this volatility through here, the model really didn't get concerned. And it only was once we started getting up to these really frothy points where it started catching some of these, corrections that we had, and then before we had the big crash. And so when I'm looking at this here, the model's not seeing too big of a sign for concern. And it's not even at the point of these just temporary dips where we might go back and retest the level more or less, or occasionally have to dip down below it, stay kind of parallel, then move back up. We're not even anywhere close to that right now. And so we're looking at overall market health perspective. That's a good sign. We're not really at a point where the model is thinking that being really cautious, or at least paying a lot of attention, makes sense. The model is basically saying as long as it stays above that level, it's just not even going to pay attention. It's not all that worried about what's going on in price as long as we're above that level. So I think that's something that we can look at. Also think that short term, a lot can happen. Maybe a lot of fear can enter the market if we go back down to some lower levels, maybe even to the 50K levels or something like that, and kind of a more extreme sell-off. But that wouldn't actually make the model scared at all, because we're still above that critical level. So obviously not financial advice. You should navigate the market as you see best fit. But that's just one of the things that I'm looking at with this particular model as I look at it. Now, another model we have is our momentum bias indicator, or MBI. This one is quite different from the MDC. This one's looking at momentum in the market, and is that getting overly exuberant, like we tend to see close to market cycle tops? But then also, more importantly, the behavior of the MDC is really important. I've talked about this a number of times in the past, where you'll see distinct patterns of behavior on this metric depending on where we are in the market cycle. So a bear market, you spend pretty much all your time in the red, kind of deeper and deeper negative momentum bias going into the actual bottom here, with just brief attempts to reestablish positive momentum bias. And then you have this transitionary period, and that's what it looks like we've been in really this whole time. And I've been talking about this entire time up here, that the MBI has been behaving very much like this transition out of the bear market into the bull market. And we continue to track that type of behavior. Now what I'd be looking for next is, do we enter the more exuberant phase of the bull market where we're spending more time, much more time up in the green than in the red? So for example, with this dip down to the red we had here, do we now spend a lot of time up, and maybe extremely up, in the green, and then just eventually go back and tap the red, or even something like this where we don't even go back and touch the red at all this entire time? That might suggest that we're now transitioning into that new phase, that we're now out of this kind of early stage of the bull market. We're entering into that medium later stage of the bull market. So we'll be able to see how that tracks based on what the MDC does. And so if we want this cycle to go higher and higher and higher, we actually might want to see a slower grind where we're going back and dipping down into the negatives here more often. This oscillation continue longer, like for example we saw here 2016 into 2017. Let this build-up stage last longer before we really go into the exuberant phase of the market cycle that takes us up here. Or like something in 2020, 2021, where we really just went crazy, blew up to the upside, and then just fell off a cliff. And then with this technical new all-time high, but not any extension of that market cycle really before we had the big bear market. So that's what I'm going to be watching for. If we get this exuberant phase and that happens, then wherever we get that, potential blow off top point might be a sign of caution, at least for Bitcoin. If we continue this oscillation, that might mean that we have longer to go before we get there. And I think for me personally, I'm going to keep an open mind. A lot of people have put a lot of stock, are becoming very dogmatic about when they think the peak has to happen. Some people say it's going to happen even before the halving, and then that's just going to be it. Some people are going to say it's happening way after the halving, and then that'll be it. I'm going to keep an open mind and be data-driven personally in my approach to that. Now, obviously, that's not financial advice. You should do what you think is best, but that's the way that I'm going to be looking at these things. So that's to kind of wrap up what I'm looking at right now. I think yesterday was an important day for Bitcoin. It was one of those days where we saw both a lot of transaction volume and especially a lot of Bitcoin changing hand in profit. And that can happen around local tops, or at least close to points where some consolidation will follow. So I personally will not be shocked if Bitcoin spends some time around these levels, maybe even comes back down a bit. That's not going to be surprising. Of course, it could just go off to all-time highs, but I'm not going to be personally panicking if we see that. We see with our market direction classifier that it is giving room for that kind of thing to happen before it would even consider getting concerned. And then the MBI just continues to march on, and it's very much behaving like mid to early bull market. And then potentially, depending on what transpires, we might see if we're entering into later stage bull market based on what happens next. But that's where it seems like we are right now. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us on X. A lot of updates on our models and more over there. And you can go to our website, polaritydigital.io, to see live data from our models and a bunch of other on-chain data and more.